These type of facilities are required for employees to be provided in the factory because their working conditions are like that. So in such situations, GST law says if expenditures are incurred because law of the land made it mandatory, then they are not covered under ITC. They are not covered under block ITC. So it is allowed. So transport facility, but transport facility in any law doesn't say a car to be provided. A bus provided for employees means in general it is provided to employees or all employees. ITC is available. It is not covered under the category of block credits. Similarly, crèche facility provided where female workers are there in a factory. Any expenditure incurred by employer for these items, ITC is available. Similarly, medical services. But friends, in case of CSR expenses which are made mandatory by Companies Act 2013, Companies Act 2013 have made mandatory for certain class of companies to spend 2% of their profit as social responsibility expenses. But GST is very clear on these expenses that ITC on CSR expenses not allowed. So any company has spent CSR expenditures, they paid GST to the service provider or the goods who is supplier, ITC will not be available to the company because the expenditure is incurred for CSR purposes under Companies Act 2013. ITC will not be available. There are class of capital goods. Though they are capital goods for a company, they are capitalized in their books of accounts like land, building, civil structures. In telecommunication sector, telecom towers, without which telecommunication is not possible. Mobile phones cannot run without telecom power, telecom towers. Then pipelines laid out outside the factory premises. There are so many industries like this where pipelines are being laid down out of the premises of the factory for transportation of maybe some liquid gases, maybe CNG, maybe some water. Though it is capitalized and it is part of plant and machinery, but GST does not recognize these items as assets of the factory. So ITC not allowed. ITC not allowed. Further friends, question is ITC available for all input services used for manufacturing of goods or services provided? Means if I am a manufacturer and I have paid taxes on my input services or on my consumables, so means tax should be available to all such expenses? Answer is no, as we have seen in section 16 and section 17. Section 16 imposes conditions for availing ITC. Section 17 puts some restrictions on that. So it is not a general phenomena that whatever I will purchase for business purposes, ITC is available to me. It is not the case. It is not like that. So section 16 and section 17 are most important sections of CGST, IGST, and we should study these sections very carefully, where ITC is available and where ITC is not available. So if ITC is not available, then what are the cases where ITC is available? So for what type of goods or services ITC benefits are available? Friends, GST says if you are manufacturing goods which are subject to GST, ITC will be available. But if you are manufacturing goods on which GST is not applicable, then ITC is totally ruled out. Then you will not get a single penny on the taxes you pay to your supplier on your inputs or input services. Meaning thereby, ITC will be available for the products on which GST is being paid or GST is applicable, and where the product is exempted from GST, taxes paid on manufacturing or procurement of inputs used for such products, ITC will not be available. For example, if I am a bicycle manufacturer and bicycle is subject to GST, bicycle is subject to GST, and for this bicycle manufacturing, I purchase steel, pipes, tires, other rubber parts, oil and mobile, plant and machinery, services of advocates, auditors, insurance surveyors, clearinghouse agents, transporters, and many more. So whatever GST I will pay for procurement of steel, pipes, rubber parts, or all these services, that tax which I have paid to my service provider or to my supplier, ITC will be available subject to conditions laid down in section 16 and restriction laid down in section 17. Because ITC is available because my cycle is subject to GST and I have to pay tax on cycle. That's why inputs are available for me as input tax credit. But if I am having a plant of generation of electricity, electricity is exempted from GST. There is no GST on electricity. But to generate electricity, I need plant and machinery, I need hydro projects, I need coal-based thermal plants, which have huge investment in form of buildings, in form of machinery, in form of engineering. ITC on all these inputs is not available. So it's a big shock to power sector. So all inputs and GST paid on these inputs is a cost to the manufacturing of generation of electricity. So it would be a cost to the company. It's a cost to the company. So friends, to avail ITC, one of the major and first condition is that your product, your final product which you are selling, must be subject to GST. And apart from that, to avail GST ITC, you must fulfill the conditions laid down in section 16, subject to the restrictions as imposed in section 17. So here also, respective section of the GST law says, taxes paid for inputs used to manufacture taxable goods. Taxable goods means where GST is applicable, like car, GST is applicable, on cycle, GST is applicable, on fabric, GST is applicable, on computers, GST is applicable, on mobile, GST is applicable. So all these products which are subject to GST and taxes paid on inputs used for manufacturing of such products, taxable products, ITC available. And if any item which is exempted from GST, ITC is not available on all its inputs. Taxes paid for inputs used in manufacturing of exempted goods and or providing exempted services ITC is not available. For if you are providing exempted services, ITC is not available on all your inputs. So health related services, hospitals, services to indoor patients. If a patient is admitted to hospital for cardiac arrest and he has been operated by hospital, whatever the charges of doctors, whatever charges of room, whatever charges for medicines given, whatever charges for items used for operating this patient, and if bill is around 2 lakh rupees of surgery, that 2 lakh rupees is not subject to GST. And if that is not subject to GST because it's a medical service, all inputs used for providing this service to the patient are subject to GST, means all medicines provided to the patient, hospital facilities, equipment used for this operation, when hospital procured, GST is paid. But it is now becomes part of your cost because ITC is not available to you. Because your final service, that is service to the patient for operating, is exempted from GST. Similarly, in case of education, education is also service, and if it is provided by private coaching centers, GST is applicable and they can take input credit for their inputs. But primary education service by schools, colleges are exempted from GST, so all their inputs becomes costs. No ITC is available. So we have to see business transaction, we have to see the nature of the business while availing ITC, while dealing with GST. It's very, very important. Further, friends, taxes paid for the input used for manufacture of non-GST items or providing non-GST services are also not available. So what is non-GST now? We have read taxable goods, we have read exempted goods. Now third category of goods are non-GST items, means items which are not covered under GST, like petrol, diesel, liquor. These items are not covered under GST. GST is not applicable on these items. We read this in our introductory part. So whatever inputs we are using to manufacture liquor or whatever inputs we are using for diesel and petrol from crude oil, all inputs are subject to GST, but ITC is not available because their final product, that is diesel, petrol, liquor, are non-GST item and they are not covered under GST. So if any GST is paid on their procurements, on their inputs or input services, will be part of their cost. All these items are non-GST in nature. They are not covered under GST law. So no ITC. There is no question of ITC because when these items are not taxed under GST, why ITC to be given or ITC benefit to be given for their inputs? Next, friends, again we are reading section 17 at this point of time, and in section 17 itself another question came into the mind. What if inputs on which taxes are paid are used to manufacture both taxable and exempted goods? It happens so many times that we are manufacturing 2-3 products in the same company with same facility, with the same machinery, with the same manpower, at same place, and one product is taxable and another product is exempted from tax. It is not covered under GST. There are so many such items. One item is taxable because it is raw material is same, manpower is same, but some of the other reason, because of their nature or importance for the industry or the market, it is not subject to GST. Then what? You are purchasing same raw material. Out of that raw material, you are getting two products. One is subject to GST, another is exempted from GST. How we will deal with ITC? So provisions are very clear, and it says inputs means your raw material, your consumables, your input services, and your capital goods, which have been used to manufacture these two or three products. To the extent used to manufacture taxable goods, to the extent used to manufacture taxable goods, including zero rated goods, important point, and or services, taxable services or zero rated services, ITC benefits are available to that extent. So if I have procured raw material for ₹100 to manufacture one product which is taxable under GST, but manufacturing process is such that out of this process I am getting another material also, another product also called Y, which is exempted from GST, on which GST is not applicable. So 100 rupees of raw material, when I am using, processing, getting one product A, another product Y, and Y is not subject to GST, then what? To the extent used for taxable goods. So means I have to note down the activities, note down the production process, note down the raw material consumed for both the products, and accordingly bifurcate ITC. To avail ITC for taxable item and to forgive or ignore for exempted item. Inputs used to manufacture exempted goods, exempted services, ITC to the extent shall be reduced from ITC available in my books of accounts. So in 100 rupees of raw material, if GST is 10 rupees, and out of this 100 rupees, 75 rupees raw material is used for taxable goods and 25 rupees material is used for exempted goods, in the same ratio, ITC will be available for taxable goods, that is 7.5 rupees, and 2.5 rupees will be cost to the production. No ITC is available on that. No ITC is available. So nutshell, if I am using raw material for taxable goods, ITC is available. If I am using raw material for exempted goods, ITC is not available. If I am using same raw material for both the products, means taxable or non-taxable or exempted, bifurcate the input tax credit in that ratio. Establish the relationship of raw material to taxable, raw material to exempted product, to the extent it can be possible, to the extent it is possible, to have a maximum accuracy while calculating and availing ITC. As I told you that ITC is very, very important for industry. It's my working capital, but at the same time, department will try to say that you are not eligible for that. So whenever you are claiming ITC, whenever you are working, though formulas are given in GST law itself, still there happens that we work out wrong ITC and have litigation with the department. So further law also raised some questions because business is so complex. What are exempted supplies for ITC purposes? Because different definitions are used for different purposes. So for ITC purposes, what are the exempted supplies? It happens when your inputs are there, It's not necessary that every input is subject to GST. Sometimes there are inputs which are exempted from GST. For input tax credit purposes, exempted supply includes all procurements on which RCM is paid, being treated as exempted supplies. Transfer of security, because on share market GST is not applicable. Land is also not subject to GST. Sale of building but does not include supplies specified under Schedule 3 of Section 7. So there are some definitions, some criteria is given for exempted supplies under ITC. When you will refer respective law, definitely you will understand it in better way. But yes, we should keep in mind that there are certain cases where they have been treated as exempted for ITC purposes. So friends, whatever we have discussed, it was related with normal business, means manufacturer or traders or other commercial activities. But for banking and financial institutions or non-banking financial institutions, there are some specific provisions for availing ITC. Because in banking, interest is cost to the bank. So interest is not subject to GST. But if you go to bank for DD, demand draft, for RTGS, for bank guarantee, for locker, bank charge some commission and that commission is subject to GST. So whenever you are approaching bank for demand draft of 1 lakh rupees, bank may charge 50 rupees as its commission and that 50 rupees is subject to GST at the rate of 18%. So here it is a liability for bank to pay GST. So if bank is providing taxable service and if RTGS is there and bank is charging something on that, that commission is again subject to GST. And if bank is charging some locker rent from you, that locker rent of 2000 rupees or 3000 rupees a year is also subject to GST. So it means bank is giving you taxable services in form of rent of locker, commission on DD, commission on your bank guarantee and all, and at the same time bank is giving you interest also on your FD and saving account, and that interest is not subject to GST. So bank is giving you both type of services, taxable as well as exempted. To provide these all services, bank is also having its inputs, procurement of inputs, and these are maybe furniture, computers, ACs, renting buildings for branches to open branch, advocate services, auditor services, telephone services, internet services, and many more. So on its inputs services, bank is giving GST to the suppliers. And on the other side, under GST, bank is having outward liability in form of tax or GST on its commissions, and also giving exempted services for interest in form of interest. So accordingly, ITC will be available to the bank or banking or the financial institutions. So law has given a formula for these industry to avail ITC, and law says banks, financial institutions including NBFC, non-banking financial institutions, they have option. First, avail ITC benefit based on the value of taxable and exempted services as we have discussed in our previous slide, in proportion to the extent of taxable services and to the extent of exempted services. Further, another option is given to them, or avail 50% of the total eligible ITC available in a month. So whatever inputs bank has procured during the month, because month is a taxable period, tax period for which bank is supposed to file their return. So in a month, if bank has procured services of rupees, suppose 1 lakh, and on these 1 lakh rupees of input services, GST for the calculation purpose is 10%, means 10,000 is bank ITCs available to a bank for all these IT. So after having 1 lakh rupees services or procurements or inputs, a bank is giving services of interest on FDRs or savings, and also these are exempted services, and also giving taxable services, that is your commission on DD, commission on your bank guarantee and all, where 18% GST is applicable. So loss is either you follow this first option or you avail straightaway 50% of the total ITC available to you and forget about rest of the 50%. So either option you can adopt. So to my mind, second option is better for simplification of the calculations and to avoid any type of litigation. You straightaway whatever inputs you have procured during the month, calculate tax paid on that procurement and claim 50% as ITC, and use that 50% ITC against your outward liabilities on GST paid on commissions, and matter is over. So this way banking companies can avail ITC without any further litigation or all.